All right, Ajay Joshi joins us, and let's take the conversation forward. Ajay, the fact that PLI in chemical sector is coming, is this new? Could this be game changing?
Yeah, good morning. Definitely, I think the government is aggressively pushing now for two outcomes via this Niti Aayog paper. One is Make in India for India, where they are going to implementing protectionist policies and encouraging local manufacturers to get into chemistries which were earlier import dependent. Second is, of course, to make India a global export hub, to position India vis-a-vis China. There, we need to work on a lot of things like infrastructure, free trade agreements, even getting the foreign companies invest in India. So all in all, government wants to position India as an alternate to China. The way India has done very well in the pharma world, we are the global pharmacy of the world. The same vision now government is envisaging for the chemicals sector. So I think we can invest, we can expect aggressive formula pushing from the government of India in this segment going forward.
Can you be specific in terms of which are the companies which essentially would be beneficiary because of PLI? Because not everybody is going to be benefiting. I mean, PLI idea is that you make life easy for companies which are losing out because of the commercial disadvantage.
Yes. So in this, companies active in the amines space, first of all, because their products are somewhat import substitution products. So Balaji amines, alkyl amines, they will be major beneficiaries. Then companies in the fertilizer segment, whether it is Chambal Fertilizer, Coromandel, RCF, Rashtriya Chemicals, all these companies would be major beneficiaries. Then companies in the bulk chemicals space, companies like Deepak Fertilizers, companies like Deepak Nitrite, GNFC, they will be major beneficiaries because these have products which they produce in India but are not able to sell because of the Chinese dumping. So these companies would be major beneficiaries. Apart from that, in the export market are agrochemical companies. Companies like Sharda Cropchem, UPL, they will be major beneficiaries with the trade policies, plus contract manufacturing companies. The way India has grown in the outsourcing of the IT services, we can now see a similar movement happening in the contract manufacturing space also. So the CRDMO companies, CRAMS companies like PI Industries, SRF, Naveen Fluorine, and in the pharma, Laurus, Divis, they would be major beneficiaries with this scheme.
All right. Hi, Ajay. Morning. This is Shrishti. But in this Niti Aayog paper, they also talked about how they want to grow the export market as well. And from the forefront, they want to compete with China as a market. Give us your sense. How can India grow to beat China? In which segments Indian players can actually take the lead? And what is the growth rate that one can expect in the export market overall?
Okay, China, beating China would not be as easy as we are saying in this paper because there, the state government is involved in a lot of chemical investments, plus lot of foreign companies, especially European and American companies have their assets in China. So what government needs to do is invite these foreign companies to invest in assets in India. Sadly, in the last 2 decades, we had not had any global chemical company investing into assets manufacturing setup in India. So first step would be inviting the foreign players to invest in India, the way government has done in the electronic segment. Similar approach can be adopted for the chemical sector. That's the only way to beat China. Second, China is today used as a global factory of the world, as a global export hub. So whichever companies are having manufacturing setup in China, they just don't make for the Chinese local demand, but they also make for the global demand because China has such amazing export policies with the Latin American countries, with certain European countries, with Middle Eastern and ASEAN countries. So we also need to work on our foreign trade policies. The way government is pushing for FTAs, I think that would be a key game changer. But yeah, we need to work on manufacturing setup in India by foreign companies as well as on our foreign policies.
Okay. If the PLI does not go through, what happens? And if the PLI goes through, when will we see the rate of change in earnings?
Or if PLI does not go through, Nikunji, it will be the similar set of cycles we are seeing, the volatility. One quarter, the companies would do well because Chinese companies are not active in the market. Another quarter, we are not doing well. like we saw in the refrigerant gas sector. In the first 2 quarters of this particular calendar year, we saw refrigerant gas prices going up because from China, there were not excess supplies in the market. Restricted supplies were there from the Chinese market, so the prices went up. But now the prices have started to come down because China has been dumping aggressively. So similar phenomena we would continue to see in all across sectors where we would be at the mercy of the Chinese demand and supply dynamics. But if PLI goes through, it would take minimum 3 to 4 years to materialize and reflect on companies' earnings. But companies which are in the import substitution play, like the fertilizer companies, the agrochemical companies, they would get to see the positive reflection in the earnings within 8 to 12 months.
Names that you mentioned, the likes of Deepak Nitrite, etc., are they priced to perfection, or do you still think there is valuation comfort in these names?
I think Deepak Nitrite, particularly the way they are moving ahead in the value chain right now, they make two of the major bulk chemicals which no one else makes in India, and now they are going to make another chemical called polycarbonate, which is the most popular polymer and net imported polymer in India. So once they are going to make it, government is going to definitely support them by putting anti-dumping duty or minimum import price on foreign supplies. So I do believe that, there's a huge scope of growth for companies like Deepak Nitrite, even Deepak Fertilizer, companies like GNFC, because the import substitution play is a much bigger picture here. These companies are already making chemicals which are net imported in India otherwise. Only the thing is, government needs to put protectionist policies so that they can sell more in the Indian market.
Interesting, Ajay. Always so enlightening talking to you and getting all the insight in the chemical sector. Good to have you.
Thank you.